Good morning, everyone. This is Marshall Gittler, head of FX strategy here at IronFX Global, bringing you our morning comment for Thursday, June 19th. The statement following the FOMC meeting was slightly more optimistic on the U.S. economy's near-term prospects, but for the third consecutive meeting, they had only minor changes. The closely watched dot plot showing committee members' expectations for the Fed funds rate showed a slight drift towards higher rates. The committee's view is moving towards a shorter tightening schedule, although with the final rate expected to be lower than in the past because of reduced expectations for the country's long-term growth potential. The press conference dominated the market's reaction to the meeting. The key point was the absence of concern about recent higher inflation readings. On the contrary, FOMC Chair Janet Yellen assumed that inflation would continue to run below target for some time, consistent with the committee's central tendency forecasts, which are for core personal consumption expenditure deflator, not for the CPI. U.S. Treasury yields fell and the dollar weakened across the board. This morning, it's only higher against the Norwegian krone of all the currencies that we track, both developed markets and especially emerging markets. A particular note was the collapse in volatility following the press conference. The VIX index is now the lowest it's been since February of 2007. In sum, it appears that the Fed's strongly committed to its current path and, unlike the Bank of England, is going to hold to its forward guidance for the time being. That means that real interest rates in the U.S. may move lower as CPI inflation increases while nominal yields actually move lower. This reversal in U.S. real interest rates could temporarily undo some of the dollar's gains against the euro. At the same time, lower U.S. rates are likely to be supportive of emerging market currencies. The most powerful effect may come from lower expected volatility, as low volatility is usually supportive of carry trades. Today, the Norges Bank and the Swiss National Bank hold their policy meetings. Last month, the Norges Bank maintained its key interest rate unchanged at 1.5%, while Governor Oystein said that he still sees rates increasing in the summer of 2015. No change in policy is expected at the meeting today, but the market's going to focus on whether the governor maintains his view. There's virtually no question that the Swiss National Bank will leave rates alone and maintain the Euro-Swiss floor at 120. As for the indicators, UK retail sales for May are expected to have fallen month on month. That could add to the pound's problems after yesterday's failure to hold 170 on cable. In the U.S., the Philly Fed Business Activity Index for June is forecast to have declined, which is bad for the dollar, but the initial jobless claims are also expected to fall, which is good for the dollar. So net-net, it may not give too much impetus either way. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.